Welcome back to Cheddar Business. Major companies are keeping the doors to some of their China plants and stores closed, while the air travel industry is set to take a hit due to the coronavirus epidemic. Joining us now is TG Watkins, Director of Stocks at Simpler Trading. TG, it's great to have you on the show. Nissan and Honda have reportedly delayed their production restarts. We got news from Lululemon earlier today. The company is keeping stores in China closed. Coca-Cola saying it's going to have an impact on their earnings. How bad could this get?
Well, right now it is looking like it's a serious thing. We've had about 2,000 deaths in China. Wuhan is an area where we have a lot of industrial places, a lot of factories, and a lot of production is going on there. And basically the entire city and a lot of people have been on lockdown. And so just everything has come to a grinding halt. So we're trying to make sure that not too much of this happens. Nissan and Honda have been projecting that they're going to probably keep some of their factories around that area closed until maybe even middle of March, as the government has helped project. So we're not really sure. We need to make sure that this actually gets contained, but if it gets any worse, this could keep having repercussions throughout the global economy.
TG, are the unknowns priced into the market right now? There are a lot of unknowns, right? The sheer number of cases, whether or not that's an accurate number, and then of course how this is going to affect companies' bottom lines. Is that priced into the market?
I think some of it is starting to become priced into the market. Apple just warned that they were probably going to be missing first quarter revenues. So Apple took a little bit of a hit on that, but they kind of recovered. The market yesterday, we had what we call a big algo flush. It basically went straight down for a while. So we're looking at some softness in the overall market. We are trying to see what kind of ramifications this is going to have in the market. I think some people are prepared for it. I keep telling our members and subscribers that, look, this is still an ongoing issue, and we need to make sure that there isn't some surprise that comes out of left field. So we just need to be aware of it and keep looking for signs of this being worse.
Okay, so how do you make sure that you're prepared without waiting too late to get that sign when things have moved significantly, TG? What are your clients doing?
So for us, what we're looking at is kind of hedging some situations like bonds. So TLT has been going up. We're looking at that. Gold has suddenly had a resurgence, so we've been getting into that. These are some of the counter trend products that we can get into when the market usually runs into a little bit of a headwind. Overall, things really do seem like they're still doing well. China and the U.S. have been injecting a lot of liquidity into their markets, which has been helping to boost the stock prices and everything. And then other than that, we can be kind of nimble as far as our trades. Just make sure you have your stops in place in case anything really rolls over too quickly. You just pop out.
I'm glad that you mentioned that, TG, because we look at the Asia markets overnight, and Shanghai was the only market that actually closed higher despite the concerns of the growing number of cases. When you look at a company like Tesla, I mean, it's been moving wildly higher just in the past several weeks. Is this a company that could really get burned because of a slowdown in supply and demand in the region?
It might be for their local regional area, as in China, and they've just been working some negotiations and deals, and they have their factory over there. But Tesla is really an American company, and over here in America, I mean, a lot of people really like them. I mean, you know the fanaticism about Tesla, the fact that they've had pretty good earnings recently, that they're coming out with new models. So right now, I don't think Tesla's going to have too much of a concern because they're not really into the Chinese market as strongly as they are into the American market. Right now, America's not having an issue with anything like that.
Right, TG, but China is the opportunity for Tesla. And
yes.
That is the market for Tesla moving forward. And I do wonder to what extent investors right now are thinking of it being dominant in China when they are sending the stock so much higher for Tesla.
It is the reason, right? The stock rallied from $500 to almost $1,000.
Because of that China opportunity.
Yes, that is definitely correct. I will also say that as traders, sometimes opportunities for stocks, they can just get ahead of themselves. Like, momentum begets more momentum. And so when things really start getting going, they just really keep going. And so people just pile on there, even if the news might be a little bit delayed or ahead of each other. As far as China and Tesla, well, this whole coronavirus thing, we really are hoping it's a blip on the radar. It has been going for a few months, but we're hoping that it kind of gets itself contained. China seems to be doing a lot of work and a lot of effort for it. And as long as they can keep it contained and this doesn't spread outside and really become an issue, then this will be a blip on the radar and everything will get back to normal once people can get back to work.
What does this mean for the Phase 1 trade deal agreement, TG?
I mean, I guess it's going to be okay. I mean, it's still the right direction that everybody wants to go. I mean, we haven't heard too many negotiations, too much talk about China and the Phase 1 deal, but it happened a while ago. This should be a blip on the radar. As soon as we can get everybody back to work, everything is going to hopefully keep resuming where it was.
Fingers crossed. TG Watkins, Director of Stocks at Simpler Trading. Thanks so much for joining us today.